Like a shipwreck, you watch in horror as the impact is felt. You can see it in slow motion. It's too late. The damage is done. Look around today and you will see various factors pointing at a slowing economy. This is practically universal in most nations right now. They cannot grow because this world has been bound by central banking and a fraudulent monetary system. Are you ready for your daily dose of truth? Well, you came here for the truth, so let me unveil that for you. Today, we're going to look at some charts. I want to show you some other information. Let's begin with the Baltic Dry Index. This is one of the best indicators that you can follow to see the health of the economy. This shipping indicator tells it like it is. Looking at the beginning of 2016, it hit its lows and ever since has been climbing. Now, whenever you see a reference to the Baltic Dry Index in the media, which doesn't come very often, you will see this point. It's going to show that it has risen, everything is doing well, the economy is booming, imports are doing well, exports are doing well, and so we should rejoice. However, let's go back in time just a little further than 2016. You could see that on the way to the financial crisis, this had gone parabolic and it came down. Then we saw a dead cat bounce and another one. And where are we today? Well, we'll have to see. But you'll note that this has been significantly lower than where it was previously, even in 2010. We've gone 10 years now where this is not a fraction of where it was before. So, the Baltic Dry Index gives me a different picture, comparing that to the government statistics. You need to understand the truth of what's happening. This is just one indicator of so many that are out there. It's important, however. I have a high-level source within the shipping industry. I won't go into any further details. And what he has told me confirms what we see in the Baltic Dry Index. He told me that the industry is not doing well, that as the years go on, this business is becoming worse. As a result, he had to sell ships. He had to reduce the scale of his business, citing the problems that we are seeing in the Baltic Dry Index. I'll move on. Average household income and the average household net wealth by income percentile. Either one you look at, you're seeing the same thing. If you are in the top 40%, you're doing well. Things are doing much better for you now than they were 10 years ago, 20 years ago, 30 years ago, 40 years ago. However, if you're in the bottom 60, you're doing terribly. Your real wealth is either stagnant or declining. And we always get the short end of the stick, it seems. No matter which person gets elected, no matter what they say they're going to do, in a longer term scenario, we're simply worse off. Go back 20 years. Things were better. Go back 10 years. In some ways, things were better. 50 years, and so on. Just pick a date, and the further you go back, chances are you'll find things are better. In some ways, of course. Other ways it's better, but looking at this purely from the economy standpoint. Look at this. Percentage of families with retirement accounts and the average retirement savings by family income. All right. Now, in the top 40%, you'll notice clearly people with more money, they tend to have their retirement accounts. Those with less money have less. That's pretty obvious. Looking at the top 40% here again, retirement savings, of course, but those in the bottom 60%, they don't have any money to save. That's what's not really being discussed. That's why we have safety nets and these social assistance programs, social security, and everything else. Manufacturing employment, okay? Let's get real for a moment here. Now, while you'll see that this has increased some degree, look at where it's come from. There's no telling where this will go from here. We've seen the blips along the road. We've seen these minute differences, but it just doesn't seem like it's going to happen. Why would they be able to manufacture in United States, for example, when they can do it in Mexico for cheaper? It's not much further to ship it, so why not just bring it to Mexico? Less regulations, less rules, more profit, more corporate profits, stocks increase, bonuses increase, everybody's happy. Change in 2007-2016 mean net worth by family. Guess what? If you're in the top net worth, your money has been increasing. Oh, but look at this. If you're in the top 80%, they're doing well too. But everybody else gets screwed over. So if you're the richest of the rich, you're happy. All the laws they've been putting into place have been benefiting you. All the businesses, the corporations that surround you or that you're a part of, they've been doing well. But you as the individual, you're doing terribly. You're not doing well. Holdings of family wealth by wealth group. Again, a similar thing. That the top 10%, they're doing very well. And if you look at the top 1%, it's even better. And if you look at the top 0.001%, it's even better than that. But all that we need to focus on is the bottom 50%. That is a large group of people. Remember that. They are doing worse and worse every single year. And the 51st to the 90th percentile, after the financial crisis, they've actually been suffering as well in this case. Something I talk about all the time and get ridiculed. Global price index of all commodities. Now, surely this had come up significantly during the financial crisis. But we're still 10 years out, still very, very low. So this is something important I think that people should focus on. You're looking at agricultural commodities, other commodities that are still subdued. Not even compared to their highs, but compared to where they were just years ago. I would say that we need to really be looking at this commodities as an important indicator for whether countries, particular countries out there, are buying them. Why are the stockpiles increasing? Are we not in need of these industrial commodities, agricultural commodities? Why aren't countries buying this up? So that's one thing that I think is important, and it gives us a little picture of the imports and exports as well. Important for the GDP of any country. U.S. Treasury bond futures, the only reason I wanted to mention this was that there have been these little reflation attempts here. And every time that this happens within the bonds, it's worse and worse. It's like it loses its muster. Where can it go from here when we're already at this very low mark? Gary Kahn floated the idea of a gas tax hike for infrastructure. That's right. What would you do if you needed money to build infrastructure? Would you cut back on any of the alphabet agencies that are just working against us every day of our lives? No, you raise taxes. All right? Help pay for the administration's $1 trillion infrastructure plan. A federal gasoline tax. I mean, what a terrible idea that is. Increasing taxes on the average individual who's already overburdened by taxes. And you're going to increase them so that you can pay for an infrastructure. Well, I don't want to be taxed to pay for infrastructure. Close down one of these alphabet agencies. We don't need them. We don't need them. They're a burden. And then this, right here. Mattel. I believe this is the biggest toy maker. You can see that their stock has done not very well right now. And I'll tell you the reason why. And it's something important that I think people who invest in the stock market need to be aware of. So the company wasn't doing well over the last little while, and I'm showing you year to date in this chart here. It had been declining. But one of the good things about this stock was that they were giving out a 38-cent dividend. So you can see that February 2017, May 2017, again 38 cents. And you see a difference here. August 2017, it's 15 cents, declining by more than half. Well, what was the cause? Well, the stocks weren't doing well. Toys R Us goes bankrupt. All this stuff is happening. So they reduced their dividend. But in more recent information, they have stopped their dividend altogether. Suspension of their dividends. So investors were very upset. They pulled their money out because a lot of them were just keeping it in there and they wanted that 38 cents. They were getting 15 cents. Maybe they weren't too happy about that. Some pulled out. But then they gave nothing. And as a result, stock drops even further. I want everybody to pay attention to those stocks that are giving dividends right now. If you believe that the stocks will rise and you're going based on appreciation, that's one thing. You can hope for that. Hope that you'll sell in time. But a lot of people are with this understanding that at least if the stocks drop, then at least I have my dividends. Understand that this could change at an instant. Don't just expect, particularly in bad times, that you'll always get dividends. Sure, you can go back some of these stocks, 20 years, they've been giving steady dividends. And so that's a good thing. But understand what they could do in an instant. I think that's important. If you found this video informative, please give me a thumbs up. Remember that when you give me a thumbs up, it helps to support this channel. So I do appreciate that very much. Last but not least, if you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. Links are in the description below. Take care.